All right, so we want to look at code of conduct. All right, so it's quite important. Remember in the previous class, we're looking at the basics with regards to the different types of auditors. All right, so in our curriculum, we have different professional bodies, all right, but the main professional body that govern our curriculum is actually SAICA. All right. So in terms of this, the curriculum that we are looking at is governed by SAICA. So we have now, all right, what we call SAICA Code of Professional Conduct. Right. So in terms of SAICA Code of Professional Conduct, right, we now want to understand what is expected. All right. If you're a member of SAICA, how are you expected to behave and what elements are you expected to adhere to? All right. So SAICA Code of Professional Conduct. All right. There are different fundamental principles that we are supposed to adhere to. But in the exam, all right, you find that they can ask you to say, answer this question based on the psychoprofessional conduct and all that. Right. So in terms of this, a chartered accountant is required to comply with SAICA Code of Conduct. Right? A chartered accountant is required to comply with SAICA Code of Conduct. So in the exam, right, or during the assessment, if you find now that they write someone, they write, say, for example, they say Manasseh CASA. All right. So in regards to this, all right, you should actually, that most circumstances that will be a hint to tell you that somehow, Manasseh is not going to comply with the SAICA Code of Conduct. So you then have to pay attention on each and every activity that she's doing throughout the scenario. All right, so there are 5 fundamental principles. The 5 fundamental principles, all right, of ethics. Right? We have 5 fundamental principles of ethics. So the first one, we have integrity. Right? So in terms of this, now SAICA says all members, right, that is professional accountant, they are required to comply with the principle of integrity. Right? So in regards to this, integrity now just means someone is straightforward and honest in all professional and business relationships. All right. So in regards to this, integrity just means to be straightforward in all. All right. Straightforward and honest in all professional and business relationship. Right. So what does it mean when you say, okay, someone is supposed to be straightforward and honest in all professional and business relationship? It means now you are not supposed to lie. All right. In regards to this, you have to be honest, regardless of how bad it might look. All right. You do not need to lie. So if you're a member of SAICA, all right, you are required to be honest in all business relationships, be it with the client or where you work. All right. So in regards to this, that's the first part that is expected in terms of this. All right. So they then move on to say a chartered accountant, all right, or a professional accountant, all right, a professional accountant shall not knowingly, right, be associated with reports, returns, maybe communications, all right, or other information where the professional accountant believes, all right, that the information in regards to this, all right, contains materially false or misleading statements. So in regards to this, I know some of you guys will be preparing financial statements for clients. All right. Now, sometimes a client can give you information, all right, and then they say, with regards to this information, can you please, can you give me a clean audit? All right. So clean audit, they're saying they're looking at unqualified audit report. But you know that, okay, this information, there are misstatements involved. All right. Now, how do I give you clean audits? So as SAICA is saying, if you're a chartered accountant, you should make sure that you are not associated, all right, with any form of information that contains materially false or misleading statement. So you find most clients don't need the information to get bank loans and all those kind of things. So they might come up now with information that they want you to sign. All right. So in regards to this, you should not be associated with the search for information provided recklessly. All right. By recklessly, what do we mean? We're saying now this information is not prepared, all right, in accordance with the standards, all right, in regards to this. All right, or the information omits, all right, or obscure. In regards to this, obscure, how do you spell that? I think it's obscures required information. All right. So in regards to this, maybe, all right, we're saying no, chartered accountant, it should not be associated with information that is omitting the important information. All right. So in terms of this, so you find we have scenarios or circumstances where some information now is outstanding information that's misleading. For example, the financials, all right, that the client can prepare, all right, they might not state that there's fraud involved in the financials. So with regards to this, that omission, do you see that omission might actually affect the third parties, which is the banks and all other sectors. So if you're a chartered accountant, you should not be associated with such type of information. Then the second, all right, the second fundamental principle of ethics is objectivity. Objectivity, all right? So in terms of this, all right, we are saying no, chartered accountant, all right, they should not compromise professional business judgment. Professional accountant should not compromise, right? You should not compromise they should not compromise or business judgments. All right, so in regards to this, because of conflicts, all right, caused by bias. All right, so in regards to this, no, you should not compromise your audit. So conflicts caused by bias, all right, or conflict of interest. Right, what do we mean by this when we talk about objectivity? Think about it. Let's take, for example, your friend or your sister, all right, your brother, whoever you're related to, all right, is going to audit where you work. Maybe you're the accountant at your workplace. Now, your brother realized that you're actually involved in fraud, just as an example. Now, is he going to report this? You see, so in terms of objectivity now, all right, SAICA is saying, no, as a chartered accountant, all right, you should act with objectivity. In other words, you have a right state of mind. You are not obstructed by the fact that you have a self-interest threat. Remember this person you are related to. So they're saying, no, if you're a chartered accountant, you should act independently. You should not be obstructed by the relationship you have with the other party. Right, there's the third code of ethics is professional competence and due care. Now, we are living in a what do you call it? We are living in a dynamic world. We can all agree there, right? Everything is changing every day. So it means now, in regards to this, if you are a chartered accountant, you are required to constantly update, All right. Your knowledge, you're required to update your skills every now and then. All right. So we know that standards are coming in each every day. So if you're an accountant, you're required to always keep up to date with the new standards. That's professional competence and due care. All right. You don't perform the work blindly. You should be in a position to prepare the statements. All right. You know how to draft the statements. You know how to do your audit. You know how to do the tasks that are at hand. So that's what's required in terms of professional competence and due care. All right. So in terms of this, we are required to attain, all right, to attain and maintain our professional knowledge and skill at the level required to ensure. So we're required to maintain this, all right, at the level required to ensure that a client receives, all right, competent professional service. All right. So in terms of this is also required, all right, in terms of you, if you're a chartered accountant or if you're an accountant, professional accountant. All right. So that is what's expected of us. And then we have the next code of conduct, all right, which is confidentiality. I think this one I will touch a lot. All right. Now you obtain information from a client. What are you going to do? Are you going to share with third parties? All right. Sometimes, if you're an auditor, you have access to a client's payroll system. Now we can agree payroll is very sensitive. All right. So, for example, now you have a payroll, and some of your friends are they're actually working for that client. All right. So, for example, your friend is a manager. Then you realize, oh, your friend is a manager, but a junior is actually earning more than a friend. What are you going to do? Or maybe another manager is earning more than a friend. What do you do in those circumstances? Right? Are you going to share with your friends? So you see, but now if you're a professional accountant, right, you are required to respect confidential information. Right? You're required to respect confidential information acquired, all right, as a result of business or professional relationships. So you're required to keep this information confidential. You do not share with anyone the client's business. All right. You can only share with other auditors. All right. You don't share with third parties. Right. Then the last part is professional behavior. Right. This one touches many, all right, in the corporate. So now there's behavior that is required, all right, from a chartered accountants. All right. So a professional accountant is required to comply. All right. You're required to comply with relevant laws. You're required to comply with the relevant laws and regulations. Right? If you're an accountant, you're required to comply with the relevant laws and regulations and avoid any conduct that the professional accountant, any conduct, all right, to comply with the relevant laws and regulations and avoid any conduct that the professional accountant knows. So in regards to this, might discredit the profession. Right. Now, let's take, for example, when it comes to professional behavior, I'm sure you guys have heard back around, I think it was around 2017, all right, where there was lots of scandals. KPMG was involved. There was Ngonki, there was an audit firm called Ngonki was involved, all right? And then there were the Guptas. All right, what happened now is, in regards to that, All right, there was a lack of professional behavior from the accountants. All right, now the accountants now they were now involved with activities. All right, there was violation of laws. All right, and then now that would bring now the profession into discredit. All right, so in regards to this, those kind of behavior now, when you're a chartered accountant, all right, or professional accountant in practice, you're required to behave, to have professional behavior. All right, it is a requirement that you always stick to professional behavior. All right, let's look at some threats to code of conduct. All right, what indicators, all right, or what can give rise to these fundamentals, principles, all right, what can threaten the fundamental or the compliance to the fundamental principles that we have. All right, so in regards to this, we have quite a lot of threats, a lot of factors that can threaten these fundamental principles. So first one, we have what we call a self-interest threat. Now, think about it. All right, let's think about it. You have shares. All right, you have shares in a company that you're required to audit. Now, maybe you have 10% shares in the company you're required to audit. Then you realize, actually, the company that I want to audit is actually involved in fraud. Are you going to point out, or knowing that maybe, for example, if you point out that the company is involved in fraud, the share price will go down? Are you going to point out? You might not sometimes, right? But also in some circumstances, all right, let's say, for example, the company is promising you money as an auditor. Does happen, all right? They're giving you, you guys call it the brown envelope, right? So they want to give you the brown envelope as an auditor. All right, to say, give us a clean audit, we'll give you the brown envelope. They give you ridiculous amounts of money. How are you going to conduct now the audit in those circumstances? So in circumstances like that, it creates what we call self-interest threat. All right, so a self-interest threat is when now a professional accountant have a direct financial interest in a client. All right, so this is when a professional accountant has a direct financial interest in a client. So in other words, there is financial gain, right, that you have as an accountant in regards to this. So it creates what we call a self-interest threat. Right. So in regards to this, we have a self-interest threat. So self-interest threat examples, all right? Examples, all right? So in regards to this, we can have quoting a low audit fee, which makes it difficult conduct an audit. Difficult. All right, so sometimes, all right, you might find out that you're quoting a low audit fee, all right? You're quoting a low audit fee, which makes it difficult to carry out an audit professionally, all right? So in regards to that, it's because of financial interest, because you want the money, all right? You as an auditor, you want the money, but now you are quoting a low audit fee so that you can have the audit. So in that case, it creates also what we call self-interest threat. You want the money. Yes, 100% when business, everybody wants the money. But now you're charging a low audit fee so that they can have you as their client. But the audit fee that you're charging is so small that maybe you're not in a position to actually go to the client every day, or you're not in a position to pay all the required staff members to conduct that audit. So in that case, it creates what we call a self-interest threat. All right. So that's a very good example of a self-interest threat in regards to this part. All right. And then another thing that we have, all right, maybe having a close business relationship. Having a close business relationship with a client. All right. Now, you guys are going to school together. All right. For example, all of you guys, you're attending the same class. All right. I know sometimes some of you don't know each other personally, but some of you end up being friends. All right. And then now, later on, maybe one of you will be auditing the other person's company. All right. Now, in regards to this create a self-interest threat. All right. In regards to this, all right, that's the part that we can look at also when you're looking at self-interest threat. Some examples of self-interest threat. You have a close business relationship, it creates that as well. All right. Now, having access to confidential information, all right, which the accountant, right, having access to confidential information, which the accountant can use for personal gain. Right. So in regards to this, that creates a self-interest threat. But let's take, for example, lotto. When everybody wants to win lottery, right? We can agree that they're talking about 150 million rands. Who doesn't want it? We all want it, right? Now, let's say you're an auditor, all right? You audit lotto, then you realize that there's actually some tricks they do. Let's just assume. I'm not saying they do that, but let's just assume that there's some tricks they do which ensure that nobody wins it. Now, you have that information, right? Are you going to play lotto? You can agree that you can play lottery, right? It's because you know that if I play this, I might wake up one morning with 150 million in my account. You see that? So you do the tricks, right? You make sure that you get all the money. So you get the 150 million. So that means in circumstances, if you have access to confidential information, all right, it creates what we call self-interest threat if you use that information. All right, the same applies with people who trade in shares. All right. So sometimes as accountants we have access to financial statements of a client. All right. You realize that actually the client is making losses. All right. But they've not yet published their information, but they're making losses. Now, you then, let's say maybe you have shares in that company. You then sell your shares today when you know the financials will be published tomorrow. You sell your shares today. All right. Now, do you agree with me now that you use confidential information for personal gain? You sold these shares today, knowing very well tomorrow when they release the financial, their share price is going to go down. So that's another example of usage of confidential information for personal gain. All right. Why am I giving you these examples? In the exam, they give you similar statements. So you should be in a position to identify such factors. All right, it's essential that we know what we're talking about in regards to that part. All right. And then let's look at what we call self-review threat. So this is B. So we have self-review threat. Right? We're about to call self-review threat. Now, what is a self-review threat? In simple terms, a self-review threat now, all right, is whereby you as an accountant, you are reviewing your work. All right? For example, a client may request your advice, all right, on accounting treatment of certain transactions. They request your advice. You're an accountant. How do I treat depreciation? How do I calculate depreciation? All right. Then you tell them we calculate depreciation by taking this amount divided by this amount. All right. You do that. Then later on, you're an auditor, right? Then you're required to audit depreciation. You see, now in a way, you're the one who calculated the depreciation for the client. Now you're required to audit it. So in simple terms, we are saying you're auditing your work. All right. So it creates what we call a self-review threat. In circumstances like this, if maybe you made an error when you're advising the client will just say, oh, but remember you're the one who did this calculation for us. All right. The same applies even with softwares. All right. The client can ask you, which software do you recommend between Pastel and Caseware? They ask you that. And then you say, oh, we recommend Caseware because it works this. Then later on, you're an auditor, right? You want to audit the client. You realize Caseware is not compatible with the client. Then you then say, oh, but Caseware is not compatible with you. The client, what is the client going to say? They'll say you're the one who recommended Caseware to us. So in circumstances like this, all right, self-review threat is actually created. So as auditors, we should try our best possible to make sure that such threats, all right, are not created in regards to the client there. All right. So in terms of this, all right, a professional accountant. So you have a professional accountant, having prepared the original data used to generate records. All right, so you have prepared the original data that is used to generate records, all right, that are subject to an audit. All right, so in regards to this, examples now is whereby, all right, preparing financial statements on behalf of a client, and later on audit the same financials. So you prepared the financials. So maybe you prepared VAT for the client, then later on you audit the VAT. So in those circumstances, it creates what we call a self-review threat. All right. Then the next one that we have, all right, is what we call an advocate's threat. Advocate's threat. All right, so an advocate's threat, all right, is whereby you're promoting the interest or shares in a client. So in other words, you're actually advertising, all right, or you're making a recommendation to the services of the client, all right? So in this case, this is promotion, right? It's actually promotion of the interest of or shares in a client, right? So take, for example, now, if I want to say, for example, you work in a hospital, all right? Then I ask you, I want to buy shares, all right? Where can you recommend me to buy shares, all right? Then, say, for example, you're an auditor for one of the hospitals. Then you say, oh, we recommend you to buy the shares in this hospital. Do you see? So in regards to that, you have created an advocate's threat, right? You have made a recommendation, right? You're acting as the lawyer or the attorney of the client. So in those circumstances, that's what creates what we call an advocate's threat. All right. And then after that, we have what we call familiarity threat. All right, we have what we call a familiarity threat. All right, it's quite important that we understand what is a familiarity threat. A familiarity threat, it normally arises through a close relationship. All right, so normally, for example, you find that maybe the CEO and the chairman and the auditor or the audit partner, they're actually close friends. They went to school together and so forth. So normally in circumstances like this, surely the CEO, the auditor cannot, right? They cannot let their friend go down. So it creates what we call a familiarity threat. So familiarity threat arises as a result of close relationship. It can be a family member, all right, or it can be through normal friendship, all right. So it's having a close relationship. Having a close relationship, all right, or immediate family member. Family member, all right, immediate family member, all right, who is maybe a director or officer of the client. All right, so in regards to this, so in terms of this, when you talk about a director office of the client, all right, we are looking at somebody who is in a position of significant influence over the subject matter. All right, so office of the client is someone with a position that is significant to the audit. Let's take, for example, if my relative, let's take, for example, my relative is actually working in the canteen, right? They sell in the canteen of a client. Do you guys agree with me that if we're auditors, right, this person does not influence our audit because they're not involved in the accounting side of the client. They're not involved in decision making. But if my relative, all right, say for example, I'm the auditor and my relative is actually involved in the drafting of the financials, that is the accountant of the client, all right? Now, do you see this person actually has a significant threat to the audit because they're very close to the drafting of the financials, or maybe it's the CEO, CFO, and all those kind of things. The people who are occupying higher position. That's what creates what we call a familiarity threat. Right. Then the last threat that we have is the intimidation threat. All right. So we have what we call intimidation. Intimidation threat. Now, under intimidation threat, all right. Now, in regards to this is whereby somebody is using fear. All right, they're using fear in regard to this. So probably they're saying, no, we're gonna fire you, all right, in regards to this, or we're gonna report you somewhere. So in those cases, there's an element of being pressured as an accountant with regards to your professional judgment. All right. So in circumstances like that, it creates what we call an intimidation threat. All right. So in regards to this, all right, is one of the factors that affect remember we spoke about the SAICA Code of Conduct then. All right. So being intimidated, or let's use being threatened, all right, with dismissal from a client, right? Being intimidated with a dismissal from a client, all right, or firm, all right, because of disagreement. About a professional matter. Right? So you're going to feel it, all right? If some of you are going to be working in the audit environment, you find that sometimes clients, they could be threatening you to say, no, you're in disagreement with us. Next year, we're not retaining you. So in those circumstances, it creates what we call an intimidation threat. All right? You're saying, no, you want us to behave in a certain way so that you can get away with whatever that you want. So it raises intimidation threat in those circumstances. Right. Any questions, guys, before we look at a simple example?
Nothing from my side.
And others? No questions.
Nothing, Dan.
All right, cool. Let's look at this question. All right, so this question paper was actually examined last year, right? Just one. Let's look at it, all right, to see what's happening there. So it says, discuss the fundamental principles that were breached by Mr. Roy Naido in terms of SAICA Code of Conduct. Right. The first thing that you need to look at, right, when you see Mr. Roy Naido, you first need to identify, is Mr. Roy Naido a CASA? That's the first thing that we need to look at. Is Mr. Roy Naido a CASA? Right, let's go to the information and see what is happening with Mr. Roy Naido now. All right, so you're a trainee accountant of ISA, a registered firm of auditors with several offices spread over the country. Either specialize in companies listed on the Johannesburg Stock Exchange in different countries. There have been no changes to JSE reporting requirements in the past few years. ISA has been appointed as the external audit of Excellent Poultry Suppliers Limited. For the past 3 years, EPS is listed on the JSE since 2005 and specializes in supplying poultry, chicken, eggs to various businesses. The company has numerous agricultural sites and processing plants in different parts of the country with their head office in Lanseria, Johannesburg. EPS has a year-end 28 February and uses IFRS as its financial reporting framework to account for poultry and eggs as biological assets, according to IS 41, Agriculture and IFRS 30 and Fair Value Assessment. The company has been operating successfully for several years, building a reputation for high-quality products and reliable service. In the 2024 financial year, the company declared a loss for the first time in 20 years. The loss is mainly attributed to an increase in cost for feed, high interest rates, increase in petrol cost related to water disruptions and load shedding. In addition, the company has faced significant challenges due to the outbreak of aviation influenza or bird flu, which is a disease caused by infection with the avian influenza flu type, a virus, in the country. These viruses normally naturally spread amongst birds and worldwide can infect poultry and other birds and animal species. The outbreak has led to increased mortality rates among poultry, supply chain disruption, and decline in customer demand due to health concerns and the unavailability of poultry and eggs. To mitigate the impact of the bird flu outbreak, EPS has implemented enhanced biosecurity measures such as the regular disinfection of facilities and vehicles and strict control measures to prevent the spread of the virus. In addition to the challenges mentioned above, it seems as if customers are struggling to pay their debts due to the current negative economic environment in South Africa, as the accounts receivable balance has increased significantly. EPS has numerous debtors, and the accounts receivable balance in the statement of financial position is material. To overcome some of its challenges, EPS has diversified its product range to include non-poultry items such as plant-based alternatives to cater for changing consumer preference and maintain revenue streams. Based on the past year's financial statements, it seems as if the new product range contributes 20% of the total revenue. As JSE listed company, EPS complies with good corporate governance and therefore applies most recommended practice set out in King 4 report. The governing body is supported by any committees, for example, the audit committee, which plays a crucial role in overseeing the company's financial reporting process, internal controls, and compliance with the regulatory requirements. The audit committee was appointed by the Chief Executive Officer, Mike Gulen. Comprises of himself, also the chairperson of the committee, the Chief Financial Officer, Dina Masek, who is also a registered chartered accountant, and 2 farmers with valuable industry knowledge and insights into the agricultural aspects of EPS operations, albeit with limited financial knowledge. While busy with the risk identification process as part of the planning stage of the audit of 2024 financial year, one of the other trainee accountants on the audit team, Roy Naido, remember Roy is our guy, right? So Roy, all right, who is Roy? Let's identify who is Roy. Now we see Roy, all right, is actually accountant trainee. Do you see? Roy is not a CI, all right? But Roy is an accountant trainee who is in practice. All right, it's important. Let's read on. So, is Roy required to comply with SAICA Code of Conduct? Yes, all right? This is a professional accountant in public practice, even though Roy is not a CA. But because Roy is a professional accountant in public practice, he is required to comply with SAICA Code of Conduct. Do you see? So in regards to this, all right, that's what we have so far. And then Roy Naidu discovered in one of the minutes of the meetings that EPS is considering changing its lawyers after they had a fallout regarding the outstanding fees payable to the lawyers. The lawyers claim that they have not been paid for additional service that they delivered. Roy did not want to see a possible job opportunity be missed, therefore did not discuss the matter with anyone, and immediately contacted an uncle who is a very successful law firm and told him about the change and the monthly fee amount they pay the current audit firm. When confronted with the issue, Roy got scared and claimed that she did not share any information. Roy's uncle firm was subsequently appointed as the new auditors of EPS. Now, let's look at it. All right. So first things first, when you're answering a question on code of conduct, all right, you start off by writing, all right? So you start every question that you discuss about code of conduct. You start off by saying, you mention the name of the person, all right? So Roy Naidu is an accountant trainee. Therefore, is required to comply with SAICA Code of Conduct. All right? In each question that you meet, when it's about code of conduct, you always state the person is a trainee accountant or the person is a CAS and therefore is required to comply with SAICA Code of Conduct. There'll be one easy mark waiting for you just for writing that. Right. Now let's identify the issues. All right. Let's see if there is any breach of the fundamental principles with regards to Roy now. Do you guys pick anything? Did Roy do anything wrong there? Based on what we did today, did Roy do anything wrong?
I think it's confidentiality.
Okay. Which part?
The part that he took the the information of the company to sell it to his uncle, so that the uncle can have the upper hand
on this
to take the contract from the other lawyers.
Yes. So in this case now, Roy was supposed to be confidential, right? To keep it confidential. All right. But unfortunately now, Mr. Roy decided to share the information with the uncle. I agree with you 100%. All right. So in terms of this, all right. So you can write down, all right. Roy Naidu is in breach of confidentiality. Right, is in breach of confidentiality. Now, you need to show us or show the examiner how is in breach of confidentiality. So as he shared information, all right, he shared information, all right. So in regards to this, which information did he share? All right, he shared information regarding the dismissal of the lawyers. All right, you can write that regarding dismissal of previous lawyers with his uncle. All right. So in this case, he's sharing information that was acquired in a professional behavior, in a business and professional relationship. All right. So dismissal of the previous lawyers. It is uncle. All right. This information was acquired in a, when regards to this, you're saying, no, this information was actually acquired in a professional and business relationship. If you check up there, what did you say about confidentiality? Let's go there. Right? So you said to respect confidential information acquired as a result of business or professional relationship. So now, what did Roy do? He went opposite, shared the information. All right. So what else do we have in regards to Roy? Any breach from Mr. Roy? Did he do anything else?
I think integrity.
Integrity, okay. What's happening there?
He provided information recklessly according to the example you gave from number one.
So
Yes,
you're
he communicated.
saying,
He communicated this dismissal of other lawyers with the other party.
okay. So you're saying, you said which principle is there?
It's integrity.
Okay, but remember, integrity, we're talking about being honest.
And that's objectivity.
Come again?
Objectivity.
Okay, which part now?
He shared confidential information that compromises the business's judgment with the uncle.
Okay, so you're saying, all right, in regards to this, you're saying, but is there, okay, is there conflict of interest or bias? Now, okay, so when you talk about objectivity, we're looking at on the perspective of the auditor or Roy. All right, let's take, for example, if it was Roy who was supposed to make the decision, then we can say his objectivity is same as saying independence. All right, so when you talk about objectivity, we're looking at independence. Is Roy independent in regards to making this? Now we're saying if Roy, all right, in terms of this, if Roy was involved in the appointment of the lawyers, then objectivity was going to be affected because his opinion was already jeopardized. I don't know if it's making sense. The same applies when you're conducting an audit, all right? Now, because your relative is involved in the client, you're no longer objective. Or because you have a financial gain, you're no longer objective. Objectivity is about a state of mind, all right? Are you in a position to make decisions without any due influence? That's objectivity. I don't know if I've answered you there.
Okay, makes sense.
All right. Okay, cool. So when we talk about objectivity, we're talking about making the decision. Yes. Roy, is he being affected in terms of his decisions? All right. Anything else now that we have, guys?
You can say what Christina was saying, that integrity,
Mm-hmm.
because he provided information recklessly.
He provided information. Is that okay? Is that not professional behavior, probably?
Okay.
All right. Remember, integrity is about being honest. Are you telling the truth or not? That's integrity. All
Okay.
right. But now, what you guys are raising is what we call professional behavior, maybe. All right. So looking at it, so in terms of this, Roy now, all right, lacked professional behavior. All right. So in regards to this, Roy, Naidu, all right, lacked professional behavior. Professional behavior. All right. What did he do? Right. By sharing client information with his uncle. Then you cut down. What did we say about professional behavior? All right. In regards to this, so we said you're using professional knowledge. All right. In regards to this, sorry, professional behavior. All right. You're saying you're failing to comply with relevant laws and regulations. All right. You're behaving in a way that puts the profession into discredit. All right. Imagine other people get to know that actually Roy used the information he acquired from the audit to inform his uncle so that he can get if it's a tender, all right, in regards to this, but in this case, to get the vacant. So you can say Roy Naido lacked professional behavior by sharing client information with his uncle. Then you write this might bring the profession into discredit. Please, guys, do you guys see something? When I'm writing my points, do you see that I'm also including these points? Discredit. When you talk about professional behavior, you need to make sure that you include this part. All right? Confidentiality. You also need to quote, all right, that you said, oh, you're using information that you obtained as a result of business or professional relations. All right? When you look about professional competence, all right, you also need to look at client received a competent service. All right, you discuss something like that. Objectivity, you're looking at compromise judgments. Right? You need to make sure that you highlight that. When you look about integrity, make sure talking about straightforward and honest. Is there anyone who can give me where there's lack of integrity? He lacked integrity. Where? Look, Roy claimed that she did not share any information. All right? All right, so Rose. All right, so in regards to this, Rose, oh, it's actually Rose Naido, not Roy. I'm sorry. All right, it's Rose. Right, so it's a she. So Rose got scared. Right, so Rose Naido, all right, lacked integrity by lying that she did not share. Remember, she lied that she did not share the confidential information with her uncle. All right, she was not straightforward and honest. You guys see that? So that is how we answer auditing questions. All right, don't worry, no, of course, the first time that we're doing it, all right, we're going to do a lot more questions around this aspect here. All right, any other questions, guys, in terms of Roy and this part? So there's how many marks? I think it's about 5, right? 5 marks. So we could have grouped. So there's 1 mark, 2, 3, 4. All right. So there's 1, 2, 3, 4. Let's look for the last one. What is the last point? Anyone with the last point? Mm-hmm. Right. I know, of course, there will be some marks. All right. So in regards to the examiner, there'll be a amount marks. So you select of integrity, you find that you get a mark there. All right. Not being straightforward, you get a mark there. All right. So these are the points that will award you. So you might get 2 marks for that. All right. So lack of professional behavior, you get a mark. All right. And then bringing the profession might bring the profession into discredit. You also get another mark. So you find you have 2 marks in regards to that point. All right. So that's how easy it is to actually pass your exam. So it's a breach of confidentiality. All right. You explain how is drawing breach of confidentiality. All right. Information acquired in a professional business relationship. You also get another mark. So that's how you maximize. So there's 2, 2, 2, and then 1 there. So that means we have already surpassed the number of marks that they have there. All right. Any other questions, guys? No questions. All right. Can you guys practice?
Can I ask a question, Mr. Yan?
Yes, ma'am. Yes, ma'am.
Maybe in case if Rose was a CA,
Mm-hmm.
and then the objectivity.
Mm-hmm.
Will we do objectivity?
Okay, so in terms of this, all right, objectivity comes in if, remember, is Roy the one who's making a decision? Let's look at this. So objectivity, all right, we are saying Ross, when he had decision making, was her independence affected? All right. Did she act in the right state of mind? Right? That's objectivity. So normally objectivity, we apply objectivity. For example, if Rose, right? Rose was required to report a matter, all right? But failed due to a relationship with the uncle. Right? Then in that case, it was going to affect personal judgment. Or in terms of object, you can, all right, you can bring in the concept of objectivity to say Roy lacked objectivity, all right, in the sense that she was not in the right state of mind. All right, remember we said objectivity, all right? There was bias and conflict of interest. So you can put it that way, all right? If you say, maybe if Roy was going to get some benefits from this, from the uncle, then the objectivity was going to be affected. You can, if you want to put it that way, all right? So in terms of this, I see you guys want objectivity. So let's just put it. Right? So Rose lacked objectivity. All right. She lacked.
I think we're just curious as to how you would use it.
All right, no, that's fine. Let's put it like this. So Roy lacked objectivity, all right, in assisting her uncle to obtain the what is being obtained. It was the contract, right? To obtain the contract, all right. To obtain the contract, if there is, as she is biased or she has a financial gain. As she has a financial gain from, so let's say, for example, if the uncle is promising to give Roy something, all right, so there's a financial gain from the contract. Right? Regards to this, then that's lack of objectivity. All right, is it better now?
Thank you, yeah.
All right, cool. So basically, that's what we have as part of the objective. So she has financial gain. All right, we can push it to say, okay, there's financial gain. So in that case, there's objective. All right. So that's that part. All right. And then in our next class now, we're going to be looking at King 4. All right. So in the next class, we're going to be looking at King 4. So there's a midweek class, all right, which are allocated there. All right. I think I'm going to let Eugene do it. Have you guys done class with Eugene? Do you know him?
Yes.
You know him. All right. Have you guys done class with him? Are you fine with him?
He was fine on text.
He was fine on text. All right. Okay. That's fine. I'm going to let him do the audit class. So he's going to be doing the midweek classes. I'll be with the CTA guys. All right. But I'll continue with the Saturday classes. All right. So it's like a repetition. All right. So the midweek class is like a repetition of the midweek class. All right. So whatever we are doing here is going to do it with you guys. It might be different questions. All right. But you'll do with you more or less the same question, the same stuff as well. All right. So now since you guys have done the code of conduct, he's going to do it. It will be more like revision again. All right, which will benefit you more as well.
Oh, okay.
All right.
Okay.
Cool.
Yeah.
All right, cool. Otherwise, have a lovely weekend, guys. Bye.
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 Right. Bye.